The MSCI Hong Kong Index is the biggest and most liquid option for investors looking to get broad exposure in the Hong Kong equity market.
Yes, now look, hang on a sec. I think let's understand that because this equity instrument isn't available on our platform, let's just have a general conversation for the moment about the broader Chinese equity investing scene. Because we know that Chinese companies are Hong Kong listed and based in some cases. We also know that there is a substantial market in Shanghai, and we've been seeing the headlines in recent times about these stocks being up by 9% one day, down 9% the next day. Big intervention by the Chinese government. So broadly speaking, is there any interest, perhaps we should ask this question, of investing in any of these markets at this time?
Mia, you're the one who's got your finger on the pulse.
Yeah, I think for me, this is a case of a lot of volatility. So at the moment, even though there are companies that hold a lot of promise, the trading on these exchanges are questionable at this time. So for me, I wouldn't want to have this in my portfolio and contaminate it with unnecessary volatility, because that will have a significant effect on the risk-return sort of characteristics when it comes to the math of the portfolio. In that case, I'd rather steer away from broad exposure to this market. I think over the long term, you do have the chance, long term, like 10 years plus or even longer, to get it right, because this is a growing economy. We know that the growth is slower though, but there are still very interesting companies, and the fact that foreigners are now able to access these companies makes it even more interesting. But they'll have to sort out, those trading issues that they've been seeing.
Isn't the more important question is the impact, or perhaps the more important question here, Paul, is the impact that China is going to have on Africa and specifically our market?
True, and also what impact or benefit to global companies does being able to access the Chinese market bring to them in terms of the dynamism of their growth? Because you can invest in companies like Starbucks and Nike and Visa and others that are entering the Chinese market. The automakers are big there. We know also that you can buy things like BHP Billiton if you're keen to invest in the resource intensity of China. But I think to go straight into the Shanghai market is a problem. Although I just want to, as an addendum, say that the Hong Kong market is home to quite a number of well-capitalized, well-run Hong Kong-based companies like Hutchison, Whampoa and others, which have been run for many years by Hong Kong-based businessmen that are of high quality. And I think also things like ICBC, China Mobile and companies of that sort are interesting. And then of course there's Alibaba and Tencent and all of those sort of things that deserve a mention as well.
Well, Mia, we've got interesting times ahead of us as we watch that action on Chinese markets. We've got the PBOC, the People's Bank of China, stepping in to stabilize the market. It is hugely leveraged, and as you say, potentially you don't want to contaminate portfolios right now with the volatility and uncertainty out of that territory.
I agree. I completely agree with what Paul also said, that I'd rather take exposure to China through multinational companies listed elsewhere. So for this moment, we hold Yum, for instance, which is expanding into China aggressively, but I won't contaminate the portfolio, so I'm not hot on this.
Hot or not, Paul?
Yeah, I think we're going to give it a general take care, avoid and caution, so not hot with regard to any of those specific Chinese indices.